Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside started. At the moment, the market is testing the exact same zone. So there is a good probability of seeing a potential rejection to the upside being created, as happened already in the past when the market was testing this exact same level. We can also notice that in going and testing this demand and support level, the market has also now created this M pattern, actually in overextended M pattern. And after a pattern like this, usually the market reacts with a rejection to the upside for the market to go and complete the pattern at the neckline. So essentially with a retest of the previous support turn resistance, which in this case is lining up exactly at this level. So here in the monthly, everything's looking quite bullish. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the market at the moment seems overextended to the downside. In fact, we are clearly in a downtrend, but every downtrend is composed by a series of impulses and corrections, essentially creating lower lows and lower highs. Now, in this case, the last move was the creation of a new lower low with this impulse to the downside. So at this point, the next logical step would be for the market to create a rejection to the upside before then creating a lower high. That definitely seems like the most probable scenario. So from a weekly standpoint at this point, if we will start to see some institutional longing inside of this demand and support zone, that would increase the probabilities of a potential rejection to the upside away from this level. We can also notice, if we look left, that this zone was already acting as a quite significant turning area for this market, so a pivot area in which the market pivoted from a bearish market to a bullish market, and all happened exactly here. Now, as the market is now entering exactly into the same zone, there is an increased probability of seeing more institutional longing inside of this area, which at that point could potentially push price higher. Now, dropping down on the daily time frame, what do we see? Now, here on daily, we can notice how the market has already started moving horizontally. So usually this means that the market has essentially entered inside of a accumulation area in which the horizontal price action simply means that institutions are adding longs and are essentially buying up this market, which at that point could definitely push price higher. So from a daily standpoint, weekly standpoint, and monthly standpoint, everything seems to be aligning for a potential accumulation phase and then rejection to the upside. So let's go and see what we can read when it comes to the commitment of traders. So what are actually institutions doing? Now, if we look here at the data at a first glance, it would seem that actually institutions are shorting the NZD. And keep in mind that all currencies on the spot are traded against the USD. So if we're looking at the data for the NZD, we're actually already looking at NZDUSD. And what we can see here is that with the last reports, net positions have been massively decreased. We went from essentially a positive net positioning of 1.2K all the way down to minus 42.5K net positions. So we have seen a massive decrease in net positions, showing how institutions have actually been shorting NZDUSD and making it weaker. And in fact, NZDUSD has been trending lower quite aggressively. So what this actually shows is that as institutions are moving to the bearish side of NZDUSD and making it weaker, the price has been falling, which is perfectly normal. However, why we still don't see institutional longing inside of this zone? Well, actually, we don't even have yet the data inside of this level because of the Christmas holiday, and we had a delay in the release of the new data. Therefore, the last data we have is of the 17th of December. So we still don't know what institutions have been doing inside of this area with these last candles, so inside of the actual accumulation area. And there is an increased probability, in my opinion, that we will see with the new report new institutional longing, which at that point could potentially push price higher. So in a situation like this, where institutions have been reaching peak numbers of negative net positions, usually the next step is that net positions start increasing once again, but we still don't have the next report. It is what it is. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, and with the new report, we can see that institutions would start adding longs once again, at that point, I wouldn't be surprised to see a potential rejection to the upside, away from this level, rejecting to the upside that historical monthly demand and support area. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.